Hello and welcome to this very special episode of IPO KYC. Ather Energy is India's second pure-play EV maker and it's getting all set to list on Dalal Street. Founded in 2013, Ather Energy was a college project of two IIT Madras graduates, Tarun Mehta and Swapnil Jain. And today, it's valued at nearly $1.5 billion. It's also been a while since we've done an IPO KYC, and this IPO will test the investor appetite. One, after the market turbulence on account of Trump tariffs, and two, even the EV ecosystem, given the mess at Blue Smart or the troubles at Ola Electric. So let me waste no time and welcome our very special guests on this episode of IPO KYC. I have Tarun Mehta, co-founder and CEO, and Swapnil Jain, CTO and co-founder. Thank you very, very much for joining in.
Our pleasure.
So let me start with the question everyone wants to know, right? Path to profitability. You've been loss-making for the last, I think, since inception now. When do you think you will turn profitable?
See, so any new business, especially R&D and a deep tech business like ours, where there's a lot of investment in product development, in IP, in platforms, obviously it's going to be investment heavy in the early years, and then the losses are recouped and profits come. We are no different. After 10, 11 years of investment, our recent trajectory has been very solid. Any profitability is a function of two things, which is your unit economics and then the volumes you put behind it. So how are you doing on both? Unit economics, you will notice in our recent quarters, there's been an enormous improvement. We have almost doubled our gross margins over the last 3 quarters, over 3 quarters of FY25, hitting almost 18-19% kind of gross margins, adjusted gross margins. So significant progress there. And if you see our volumes, again, YTD till Q3, there has been an almost 35-40, I think almost 40% plus kind of growth. So volumes have also grown quite healthily. So put these things, two things together, I feel pretty bullish about where we're headed as a business on profitability. Also, if you see our overall losses, they've started to trend in the right direction. If you see again 3 quarters performance, losses have been reducing, not just at percentage, but even at an absolute level. So I think the basics of a business, the more you sell, the more margin it brings home, it covers your fixed costs and you become profitable. I think the engine starts to make sense in where we are. And I'm very optimistic about where it's headed. So
peak EBITDA losses behind the company, and from here on, losses should continue to moderate, as we've seen?
I think if volumes are continue to grow as we hope for them to be for the industry and certainly ourselves, and we continue to defend our margins. Remember also Ather's position its products in a more premium position that's allowed us to command generally a more premium pricing. I think that our ability to sell software separately as Ather stack, these are things that give me a lot of confidence on continued margin growth and volumes. Nobody's challenging where EV industry is headed overall. It is a growing industry. So I think, yes, I definitely feel that we continue to move towards profitability.
So you spoke about unit economics, which is basically gross margins. And gross margins in the first 9 months of FY25 are 19% versus 9 months in the comparable period of last year. Okay. These margins are sustainable and should improve. Gross margins, right?
Yeah.
That's the trajectory.
These are not one-time spikes. They've come about as, honestly, and I'll give a lot of credit to our product development teams. They've come about because of fundamental and hence sustainable reductions to our cost structures of the core vehicle platforms across chassis, electronics, battery, across the board. There's been a lot of work on the supply chain front, which has fundamentally reduced cost structures. With introduction of multiple vendors, with a lot of work on value engineering, a lot of work on straight pass ratios. So this is not a one-time, and the proof of that is this is not a 1 quarter or 1 month performance. This is now been consistent over 9 months. So hopefully that gives us a lot of confidence.
So for you to turn profitable, at least at the EBITDA level, what should the gross margins be? Should they hit 25%? Do they need to hit 30%? Is there an aspiration that you want in terms of a business model?
See, I think difficult for me to comment on ourselves per se, but I can point to a few references in the industry. I think Indian two-wheeler businesses have been incredibly strong and we have a lot of respect for them. And I think those become our guiding compasses on margins. Mass premium players have in the past been able to get to late 20s, even early 30s kind of gross margin structures. And I think those kind of gross margins in the two-wheeler business seem to generally ensure strong profitability. So I think for any business that's trying to build a mass premium kind of play, An ultra premium strategy like some of our peers, like in the bike side, they can obviously yield much higher gross margins. But a more mass premium play with scooters, I think seems like that kind of number seems to have worked out very well in the past for our peers.
Okay, and there's no reason why EV gross margin should not get to the ICE gross margins, right? There is
different structures of the industry and different structures of the product.
But you can aspire for late 20s gross margins, realistically.
I think there are certain advantages with EV sales. I think electric opens up this entire window of opportunity, an entire opportunity around software, which was not very strong, I think, with ICE architecture. Selling software allows you substantially higher margins, as you will see even in our numbers, and something we are also trying to perfect more and more. And I think this is something very new and novel with electric, not just in India, actually even globally. Tesla sells its FSD pack at a substantial markup to the vehicle price. We sell our software on top of the vehicle price with a healthy markup. So I think electric, if anything, opens up some new opportunities for additional margin and revenue, which probably was not very strong with ICE. And that's why I'm even more bullish with EV.
Fair enough. That's a point well made. So for you, what percentage of your revenue comes by selling software, and what are the gross margins on software?
So roughly about 6% of our revenue comes by sale of software. And it's a very high gross margin business, given that software architecturally is generally a higher margin business. So that's just the nature of that part of the world.
Okay. Very high. We'll go with that. What about FY24? I mean, your revenues dropped by 1.5%. You bounced back very smartly in 9 months with a 28% top line growth. What's the sustainable revenue growth we're looking at?
I think there is a secular growth that's happening, which is the growth of scooters overall. Scooters continue to grow much faster than motorcycles. And given that we are scooters first right now as a business, that part of the growth affects us also. The other part is, however, the expansion that we are doing. So we are expanding our stores. And the recently introduced model, Ather Energy, our convenience scooter, that's landed very well in convenience first markets. So there are a lot of new stores that we're adding in those parts of the country. So distribution will continue to expand healthily for us, and that's something we're excited about. In addition to that, remember our industry is at a very early stage in terms of products. A good two-wheeler maker would have 6, 7, 8, possibly even 10 products in their portfolio. Our industry is still at a stage where we have 1 to 2 products each. So we are overall at a very early stage. There's nothing wrong with us. It's just that we are at an early stage. As our portfolio expands, and I'm not just speaking for Ather, I'm speaking for our entire industry. As we go from a single product or a 2-product company like Ather to potentially 6, 8, 10 products, there's natural expansion of the addressable market that is bound to happen. And as that product portfolio expands, it'll make it more and more viable to expand distribution to the hinterlands of the country.
Got it.
Today, EV is still largely an urban phenomenon. As we go from tier 1, tier 2 to now increasingly more tier 3, a very large chunk, perhaps one of the largest chunks of scooters are sold in that part of the urban country. We haven't even entered there yet in a big way. So I think there's a lot of opportunity on both product and distribution expansion. And that's what gives me a lot of confidence for our industry's growth in the near term.
So Swapnil, come in, right, in terms of the product expansion. You're early in the EV game, but you've had only 2 products. You've gone slow and steady in terms of launching. When do you get to 6, 8 products from the current 2? And what about a motorcycle? Is that something you're working on?
Right. So, firstly, the aspect of building it over time. The first 4-5 years of the company, we spent a lot of time building the platform itself. Automotive is something where you have to invest in building a robust platform, and then you build products on top of it. And that's what you would see in our product portfolio itself. Then probably until 2020, 2021, we had 2-3 variants of the product in the market. And then over a period of time, we have added more variants. We have added of the 450 itself. Then we've got the 450S. Then we got the 450 Apex. And then we have the Arista. So if you see the last 3 years, we have been able to rapidly build up on the same platform and build multiple products. And that's the strategy we are going to continue to adopt. Our next platform, which we are now working on a completely new platform. with the same idea, build a robust platform, and then build out a lot of
When will
products
that come
on
up?
top of it.
The yield platform is under development.
It's under development.
Obviously, we can't give you specific timelines, but it's something we are quite excited about.
And motorcycle?
And on the motorcycle, again, motorcycle is a similar at a similar stage that we are building the platform. So when will we bring it out? I think we'll have to find out the right time to bring it out. The large part of the work is to build the platform, and that's what we are first. We are prioritizing that, building a robust platform and keeping it ready, and then find the right time to bring it into the market.
Let's talk about your market share, right? Because that's been a little bit of a concern. It's been around 10, 11%. And players like a Bajaj Auto, TVS Motors, they came after you, and now they're much stronger than you in terms of market share. Why weren't you aggressive enough? You ceded market share to them.
Our first product was a performance scooter, Ather 450, and I think that's done incredibly well for where it is positioned. It's a limited addressable market, 19-20% of the scooter market. But I think within that space, 450 has done incredibly well, especially in the southern markets. Our new scooter, Rista, that's the one that's actually changed our trajectory quite meaningfully. So you would have access to the Vahan data. So you would know how we have done on market shares post-Rista launch.
It's about 16%, I think.
Yeah, so and there is your answer, right? The 10, 11 that you were citing and the almost 15, 16 that you're referring to now. A lot of that growth has come because we now have a new product in the offering. And that product allows us to expand into new geographies. It allows us to go after newer customers and also the larger markets. Particularly if you see, so go market by market. We're not trying to win all India in one shot. And I think good companies will also always focus. We've been always very focused in South, where if anything in recent months, we've been also the largest player, even by volume. Recently, we've also started doing well in some of the Western markets. And I think with Rista, we'll continue expanding. We are very clear, we will only expand our distribution as it shows viability. We don't want to expand distribution if it is not viable. And more products just make more stores profitable. So with Rista, that's giving us a lot of confidence. We'll expand there. Our peers in the industry can sometimes expand faster because they've got existing ICE businesses. Which makes this a question of who gets what first, right? Do you get distribution first or do you get product and innovation first? Well, we're learning distribution and we're expanding that.
So what's your market share aspiration?
We strongly believe that India is a premiumization story. You would typically imagine somebody going after a mass premium strategy is going after a small market share. We think otherwise. We think the entire two-wheeler story is premiumizing. Scooters are particularly premiumizing super fast. We've even mentioned that data in our RHP. In fact, the sale of 125cc scooters, which used to be considered premium once upon a time. If I tell you there's a premium category, you typically expect what? It's 5-10% of the industry, right? The sale of 125cc scooters has grown from 20% to 47% in FY24. And I'm sure it would have continued its growth trajectory even now. So we actually believe that the two-wheeler story and the scooter story particularly is the one that of premium products and consumers upgrading up. We want to be a great option for those customers. That's what we're positioning our brand towards. So we obviously have good market share ambitions. Can't put an exact number.
You know, I'm coming back to the market share point, right? I know it's improved from the 9 months that you've quoted in RHP and as per the Vahan data.
Yeah.
But even your peers, the ones I referred to, Bajaj, TVS, even their market share has climbed as per the Vahan data. It's now at 20% plus. Do you have the resources to fight the big boys?
It's very incorrect to see this in terms of a fight. I know there's an easy temptation to see that this is a fight. We're all creating the EV market at such an early stage. Honestly, very few products are even truly competing against each other. At this point, remember, we all have a fairly small portfolio that we are selling out of still a limited distribution compared to our ICE peers. So the real challenge for us, all of us, is to convert more and more of the ICE vehicle buyers to electric vehicle buyers. And which is why you will need a lot of resources to fight if it is the same pie being cut different ways, right? So in that case, you have to go discounting, you have to throw money at it to win market share. I think right now market share is really down to what products you're building and how many more customers' problems can you solve. And that's what happened for us with Rista. With 450, we could only go after one kind of customer, the performance scooter buyer. The minute we could build a convenience scooter, our market share and our volumes have shown a healthy trajectory. So, and I think that's what will happen. Build more scooters, build motorcycles. As we build all of them, we are fundamentally taking market share away from petrol vehicles. And that's the right way to see this. We've been fairly healthily capitalized by our existing investors. And obviously, I think the IPO is that one big jump.
Which gives you the resources also.
It also gives us good, solid resources to continue investing in growth.
You know, the problem, you spoke about EV penetration, right? The pie is large enough for everyone, but the pie needs to keep growing. Now, EV penetration, despite all the hoopla surrounding it, has been increasing at a very slow pace. It was 4.5% in FY23. FY24, it was 5.1%. And now in 9 months, till December of 2024, it was about 5.5%, 5.6%. So it's been expanding despite all the subsidies at a very slow pace. And that's really the elephant in the room for all of you.
Right. I think there is zero doubt in my head that the industry continues to expand. Volumes will continue to grow. I think after our initial product launches, all of us are now starting to also solve for industry barriers. Like, how do we get more consumers? So you're looking again at the overall two-wheeler number, but if you see the scooter data particularly, because most of us are selling electric scooters for the most part, penetration is already up at almost 3x that level, 3.5x that level, because scooters are a different market. I think as we start solving for better range, easier charging, better battery life, and I think a lot of that is starting to happen. If you see Ather itself, we now are, in the recent months, we've been able to introduce an 8-year battery warranty. The truth is, Ather has been only in like, 100, 200 cities until now. India's a 1,000-city market. So we've got to expand our distribution, we've got to expand our products, and most importantly, we've got to start solving for category barriers, which is, I think, starting to happen in a meaningful way last year. The results of it, you will see as consumers discover it. The ultimate answer here also is that marketing in our industry has been a little slim. So that's something we've been very bullish about. In fact, we wrote a large section in our RHP that it's very imperative for EV brands to invest in marketing, not as a way to fight each other, but as a way to drive category awareness higher. Because the fundamental truth of electric is that it is great for consumers. Total cost of ownership is amazing for most scooter buyers. And with things like 8-year battery warranty, a large fast charging network, they are good answers to some fundamental category barriers. But you need to get the word out, which is what we are starting to invest in a bigger and bigger way.
So one problem, as you also articulated, is the way geographically your sales are happening, right? 60% of your sales happen in South. How will this change? Because you have a production facility, you're planning capex in Maharashtra. So how are you looking to change? Are you looking to be more aggressive in other areas? Like West, you've already started.
West and North are big focus areas for us. They are good electric scooter markets, and one we are quite excited about with Rista. Part of the reason we are also setting up Auric is in Aurangabad. A complete facility there is so that as our sales expand in these territories, which is what you're hoping for, we also have a production facility in that geography to service them.
But you are aggressively expanding your distribution and marketing spends.
Yes, we are.
Okay, got it. And capex, currently, what is the production capacity and how much will it increase in phases, if you could give a timeline?
So the current wholesale capacity is about 4.5 lakhs, and with the Sambhajinagar Auric facility, we'll be investing about 900 crores. The entire investment will be done by March 27. Like to do it if it happens earlier, and that will bring in about 500,000 capacity more in phase 1. Post that, when we work on the phase 2, that will bring in 500,000 capacity more.
Tarun, how would you gauge the investor sentiment? Because you lowered the amount that you were looking to raise. What we learn is that even the valuation has come down over the last couple of months. One, that there's a lot of market turmoil. But even this whole, Blue Smart scandal, for instance, Ola Electric share price has fallen 65% from its highs. So clearly, investors have sort of burnt their finger, private and public.
I would put it differently. I think investors now are wiser and understand the industry a little better with some more experience. What we have had an opportunity to meet are incredibly smart investors who have a very good thesis of how the category expands. I think there is no doubt in anybody's mind that the EV sector is growing, and scooters are going to obviously lead the way here. That's what we believe in. That's what we've seen in investors. You notice that even in the overall size of the IPO, we've only touched the debt repayment schedule, nothing else. None of the growth investment pieces have been retouched at all. And even debt we have largely touched only because recent quarter's performance gives us a lot of confidence on our accruals and our ability to repay the debt instead of paying it right away. So our growth story remains intact. We have zero doubts about it, and I believe investors see that also. Finally, price is, it's a book building process. It's such a long process. Banks work with investors, and the feedback that comes eventually is the one you go. Nobody can time, and I don't think we're definitely here to time the market. I think we're building a great business that, and I'm sure recent data kind of gives you that sense, is on a great trajectory. So you want to make sure that the future growth is a fully
so investors haven't turned a tad bit cautious, right? There's no taking, I mean, credit where it's due. What you've built is remarkable. But, while you can be relatively unscathed, you can't be immune if the investors turn cautious towards the entire EV ecosystem.
I think that plays out in a bit of timing also. So, and I think bankers have advised us well there when to bring the issue out, making sure that the entire investor community is kind of kept abreast and is kind of kept aware about how the business is shaping up.
Just, one final, set of questions, and that's on Hero MotoCorp. Hero MotoCorp is one of your early backers. They invested in 2018? 17. And they hold now how much?
37% before the IPO.
Before the IPO.
Yeah.
Now, they're also, isn't there any conflict of interest in that way? Because they are also one of the largest two-wheeler makers. They have their own EV aspirations.
You kind of answered it. Hero has been one of our oldest backers. Even before Ather actually began production and was, for the most part, an idea. Hero has been a solid investor. It's invested over several private equity rounds that we have raised, along with investors several times. But I think what's been true and what's been clear to both parties is that it has a very different platform, and it needs to be built in a very different way. Our focus on scooters, our focus on premium customers, our focus on the upgrading Indian, I think these are very, very interesting and very different stories, and which is why we're building them out differently.
So no conflict of interest? Because they would know what you're doing as the promoters.
I think that is, I think we're not at a point in our industry where it's individual EV players really competing with each other that's really determining this. I think Hero's presence on the cap table, their continued and solid support over the years has meant a lot for the business, and we're very, very, very happy to have them as
So what's their involvement
partners
then in the company? So
their involvement is largely at a board level, where they've been involved for many years now, almost all the 8 years that they've been. There are a few topics on which we have even collaborated. So like we realized a few years ago that infrastructure, especially charging infrastructure, needs an industry-wide push. But how do you get started? Because every player is so neck deep in operations and just thinking about their own strategy because they're still early days of the industry. Now that was a topic where us and Hero could get together and take the then Ather standard and actually push this as a more neutral and industry standard together. Actually commonize charging infrastructure, push for things together, push for a common standard in India. So there have been topics like that where we did collaborate, but a lot of the operational topics, companies have stayed independent.
Thank you. Thank you very much, Tarun and Swapnil, and wish you all the very best. Thank you.
Thank you.